A number of semiconductor stocks are up sharply year to date, outperforming the S&P 500 in a major way. Joining us now, Joanne Feeney, partner and portfolio manager at Advisors Capital Management. Joanne, what we're witnessing reminds me of what we're seeing in so many areas, and that is we're reopening, so that's going to be a positive. But things have also moved forward during the pandemic, where you see chips. They've been part of our life for 10 years. We know 20 years, but now they're just everywhere. So you've got kind of the two tailwinds, but then you got the shortage. So how do investors look at this in terms of trying to make the right investment moves?
Yeah, good morning, Joe. It's a really important opportunity for the semiconductor industry and so also for investors, because the way we have seen governments invest in this industry in the past, it's been at the state level. For example, states, trying to subsidize by offering tax breaks to get a semi-fab in their location, like it's been done in Texas, like it's been done in upstate New York. And so what that means for investors is, first of all, it's a really strong sign that we're likely to see more production in the U.S. with subsidies, which drops right down to the bottom line for these manufacturers. So they incentivize another plant by Taiwan Semi or by Intel or any of the others. Infineon is located in this country, right? We're likely to see that really drop to the bottom line and boost their profit margins. And the reason why the government involvement is so important here is because those chip fabs, right, those companies want to run capacity utilization as high as they can. They don't want to have unutilized equipment on their floor, right? That's just depreciation costs. And so to get them to build extra capacity, right, is really costly for them. And so you need the government to get involved to help subsidize that building of extra capacity. From an investor perspective, it means a lot more production, a lot more signal that there's good demand out there for multiple years. And so you can look at a Taiwan Semi as an opportunity here, but also look at the designers that are using those manufacturing plants, whether it's a Qualcomm, an NXP, a Broadcom. These are all companies that are seeing demand drivers that are likely to last for multiple years. That's what this shortage is telling us. And the government support could mean that we're going to have lower cost manufacturing available to those companies.
Over the years, you saw some high betas in a lot of these stocks because it was so easy to go from boom to bust. Does that change now? These manufacturers would be hesitant to build too much capacity because in the old days, you'd turn around and suddenly there'd be a glut that you're stuck with.
Yeah, exactly, Joe. That is why they're reluctant to build extra capacity. And when the industry is as consolidated as it has become, right, they know they can pretty much sell out their fabs, so why build extra? That's why the subsidies are probably going to be pretty important for getting that extra capacity up and running. But what's changed, Joe, over the last, say, 10 or 15 years is that the uses of semiconductors have gotten a lot more diverse. It used to be, right, during those boom-bust cycles that we remember, that it was really the PC cycle, right? Intel would come out with a new chip, and then there'd be all this building and all the chips around them would ramp up, and we'd have this period of time when sales were up, margins were up, and things were really great. But what's happened recently in the last 10, 15 years is that we're seeing chips go in a lot more places. Obviously, the auto industry has grabbed a lot of attention, but also industrials, factory automation. And then look at the home, your garage door opener, your smart locks and security, your entertainment systems. And now with 5G empowering even more applications, right, of smart everything and communication needs, right, the diversity of demand has really flattened out the cycle quite a bit. So you don't get these very discrete boom and bust cycles that we used to get. And that makes it a bit more safe for investors to go into that space. And so we should see the volatility of the stocks go down along with the decline in the volatility of sales and earnings.
Right. Even in sneakers, I know, right next to the blood, I think they've little drop. So if I wanted an ETF, if I wanted to make my own ETF, I'd put Broadcom, Taiwan, Semi, Texas Instruments, NXP, Qualcomm, Qorvo, and Ciena. That would be your ETF if you put one together?
There are others that you could add. Lumentum is another one. Okay. But you've hit some. Texas Instruments is another one. But as you know, Joe, right, we invest in individual stocks for our clients, so we're able to go and find the ones that are really at a value opportunity.
But a basket might be good. A basket might always be good for.
Well, we'll make a basket. We've got about a third of our infotech is exposed to semiconductors right now because we are really convinced that we're going to have many years of growth here, and because some of these stocks are at a real value. I mean, look what's happened to Qualcomm in the last, several months. It's a real opportunity, and it has a nice dividend for our clients that want to see some income in their portfolios.
All right, Joanne. Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.